What is up, everyone? How are you doing this morning? Just getting a few things set up here in the background before we officially go live at 8 a.m. this morning. And for those of you right now that are watching the live stream, if you could do me a favor, give me a quick sound check and let me know how the sound is. My voice is a little toasted from all the videos as of late, but I should be able to get through this unscathed. What I also need from everyone out there is to let me know what their level of optimism right now is regarding the market and CPI data that's coming out. I've been taking a look at things real closely here this morning. I got up super early. I've noticed a couple things, all right? First of all, we had Bitcoin just roaring yesterday into this morning. And again, now look, it paused just a little bit. And what's up, everyone? Thank you so much. Oh, I got a good one. Don't trade while golfing. I like that. That's actually a good one. Yeah. When you're golfing, just focus on golfing, man. Just put the phone down. Don't do that. Don't let it mess you up. Conservative Hero Massimo and all y'all Khalid is saying, hey, we are at 1,000%, 10,000%, holy crap, for the sound. What's up, Sniff? Good to see you. All right. So some of the observations, I just want to go over some observations here really quick that I noticed last night going into this morning. Bitcoin absolutely just went on a tear. I can up the part of the problem with the volume might be my voice. My voice is, I'm having a lot of problems with my voice here. I've just been doing a lot of videos lately, but let me crank up my voice here real quick here. I got to remember which module I want to go to. Hold on a second here, guys. Let me go to this. We'll go to this. Let me just give you guys just a little bit extra volume here. All right, let me know. Is that better on the volume side? All right, here we go. Problem, reaction, solution. Yes, I like that. Some Lean Six Sigma talk going on right now, and lots of thank yous coming in. But yeah, so last night I was watching the charts and I was watching them up to this morning. I got up a few times this morning just to see kind of what would happen, because part of CPI data is like this, all right, is you're going to have a pre-market reaction. And that's what you're seeing right here, these movements right here with Bitcoin, the movement with XLM. I'll clean this up a little bit and go to a little bit more concise time frame. You can see those movements, right, the on-up movement. Then what you could see, and most importantly, you could see it by Bitcoin, as soon as we hit that mark, that 18.2 mark, we really just kind of went sideways for a while. And thank you for the feedback on the sound. We really went sideways for a while, and that's kind of tell me that that's the pause, right? So you can see this optimism right here that was built in heavily. I mean, there was some heavy optimism. Let's be real here, everyone. CPI data is obviously super important. Chinese market opening up is super important, all right? But think, how much has that economic data changed? And what's up, Jimmy? Good to see you, sir. And again, thank you to all the channel watchers, supporters, members. I totally appreciate it. And also, too, let me know where you're listening or viewing from this morning. I'd like to see, because I got some people from Blue Ridge Parkway and I-26. Hey, I'm going to be up in that way, actually, by Asheville. I'm going to do some off-grid Appalachian Trail hiking, probably with my dog here pretty soon. But what we're looking at is this, right? The pre-market action, and then we're looking at some sideways action. The key is when that announcement is made in 36 minutes from now, how does the market react further from that? Now, all you're going to get from the CPI data this time around, and actually from every time, is just what the oomph is, right? And I've got it here. I've got several different versions of it right here. We're going to be able to dive in. Holy crap, and I'm going to read these off. I know, I figured that, Jimmer. I figured that. We got Eli Ecker, we got Nebraska, Australia, Long Island, Vermont, Virginia Beach, the UK. Holy crap, everyone. All right, but what we're looking at with CPI data, okay, is it's going to give us a view of what happened in December price-wise. And we're going to get into something before CPI data is released. I've got a chart and I've got an interactive picture that we're going to work with, because I want to show everyone here that there's something that we have to be very cautious of. But we have to be cautious with good news, and I'll explain it a little bit more. Let's see here. Southern Florida, Philippines. We got a few people from the Philippines, Netherlands, West Wales. Thank you, Kevin, for chiming in. And yes, like I said, let me know where you guys are chiming in. More people from the UK. Has anyone searched for the bones in the river? Sam, I do not know. And yes, Jimmy made it to the year. Look, hey, Jimmy, that is super cool. You were talking about that in the last stream, saying, hey, dude, we're almost at that year mark. Thank you, Jimmy, for making it to the year as a super supporter. Completely appreciate it. But we're going to talk a little bit about something that we have to be cautious about, and it's caution with good news. And I want everyone to kind of think about that idea, okay? Because yes, the markets are definitely rallying. We're seeing our favorites up here making some good moves. XLM, I got to be honest with everyone. XLM, I was really hoping would be above 8 cents before the CPI data was released. When I was watching this early this morning, I was like, okay, I kind of like this action right here. I like it. But the problem was that we couldn't hold it. You couldn't hold it, and in fact, it went below the 8 cent mark. And that's where XLM has kind of been one of the interesting stories about this, is we've seen that 8 cent mark go back and forth between the floor as well as the ceiling. And honestly, if we zoom out just that little bit here, I'll zoom out just a little bit for everyone to see. From December, right, when we had the last CPI data report, you can see the last CPI data report just rocked it on the way down, right? And so we kind of struggled. Then once we got to that 8 cent mark, we've been really hovering around that really quite closely. And I seriously was. I was really hoping for XLM to be above 8 cents before the CPI data came out. I really hoping for it, because 8 cents has really been a pivotal point for XLM. Bitcoin is very interesting. Bitcoin's telling the story. And when we zoom out, okay, let's just zoom out really quick, okay? And you guys are welcome to ask comments. No, I am not Klaus Schwab. I'm the good Klaus. Come on, Sam. You know better than that. Diggin VP, why is everything pumping? You think CPI hype leak? Here's the problem. I think this is a way for people, I don't want to say exit liquidity, because that sounds very, pessimistic. But I think there's a lot of optimism. I think when you look at a market and when you start zooming out further and further, you could see weeks and months of just pessimism, right? I mean, think about it. Think of all the heat that I've been taking here recently with the news I've been bringing. Remember, I bring the news whether it's good or bad. This is a news channel, right? Not a hopium filling channel. And a lot of us out there, we want good news, right? So, I mean, just think of your daily lives. If every day you're bombarded with something negative, the moment you have that little glimmer of hope, that little glimmer of hope can be magnified just quite extremely to the positive side. And so that's kind of what I'm seeing right here, is that people were looking for any reason to jump back in. Because think about this. How much have all of you out there really slowed down your purchasing, waiting for a little break in the bad news and to get some good news? You know what I mean? Like, and that's kind of something that optimism you have to be careful of, because optimism on the positive side can really lead to overbuying and then just a horrible correction afterwards. So I'm like I said, I'm cautiously optimistic to me. Sniff has a good point, and Sniff, I'm going to bring this up, so thank you. Sniff says, just seems to me that things we actually need, food, real estate, and whatever, will never drop in price. And that's kind of another big issue that we have to consider too, is remember, you have different things within the CPI data, and don't worry, we'll go over it and I'll show you guys how to do all this stuff on the chart. But there's things that are going to be more heavily consumer affecting, and there's also going to be things when it comes to inflation data that you can see here that's going to be more business affecting. And Sniff is right. Part of the problem, okay, is that, yeah, do we sell before 8:30? I like that. Part of the problem, all right, is that the stuff that's affecting consumers, and those you out there have seen, gas prices have gone up recently, okay? And then let's do that. Thanks, Sniff, for the transition. You helped me out there quite a bit with that. Let's talk about that, okay? So what we're going to do, we're going to go to the drawing board, all right? And I know a bunch of you out there, oh, Jessa saying another one from Philippines. Hello, Philippines viewers. But what we got right here, right? This is the 5-year chart of inflation, okay? Here's what I want you to look at, all right? And we're going to tell a story. You guys know what happened between this time right here. That's Rona time. When Rona happened, right, inflation went down. There was demand cycle, supply cycle was all just so messed up, right? I mean, it really was. Then you could see once economies started getting the word that, hey, the worst is behind us, Rona-wise, inflation just started rolling. I mean, just really started rolling, okay? And so think about this movement right here, okay? This movement right here. I'm going to make this a little bit of pink for everyone. This movement right here was economies across the globe opening up, all right? So as these economies opened up, you guys saw what happened, right? Remember, all of a sudden demand shot through the roof, but supply wasn't here yet because of a lot of supply chain disruptions, all right? And a lot of those disruptions were internally caused. Keep that in mind, right? We shot ourselves in the foot. That's essentially what happened. Now, what you're seeing here, right, is the decline of CPI data. And let's switch on over colors here again. Let's make this one, we're gonna make this one blue so it matches, and we're gonna draw this, okay? The big concern that we have right now, ooh, hey, let's make this one blue. The big concern that we have right now is this is what it's gonna look like. We're gonna come down, and then as the Chinese market opens up, we do the same thing again as you saw here, all right? And what's up, Nico? Good morning to you, sir. And hold on, I'm gonna mute my secondary system over here. Give me a second, let me just mute my system real quick. And that's the concern, all right? So when we had the economies open back up, all right, you saw inflation just freaking roared, all right? And so the thing is that with China opening up, is the Chinese market opening up, right? Because remember, there's always a delay, right? As people, here's a good way to put this. As people, you and I tomorrow can go and we can spend, okay? And the way we can spend is because, remember, the government gave us tons and tons of money during the Rona. So there was all this big bubble of fiat all over the globe, too. It's not just the United States. This was governments all across the globe pretty much ran a similar program. So what happens is, as consumers, we can just go out tomorrow and spend. Now, case in point, people are going to say, well, wait a minute, China doesn't have the money. That's not true. Be very, very careful with all the China foot out there. Preliminary estimates have that within the first several weeks, up to the first month of the Chinese market opening, allowing people to travel outside their country, that $1 billion of cash is going to flow into tourism markets in the far. You're thinking Philippines, Thailand, I'm trying to think of all their other big popular destinations out there, okay? So because of that, again, remember, you're gonna have a whole bunch of money jump into the market, but the actual like supply part of it is just not gonna be ready yet. Supply always takes more time to creep up. I want you to think about what happened when the Rona, like when we started seeing a lessening of restrictions here in the United States. Remember that? A bunch of us wanted to start going out to restaurants. What happened? We didn't have the workers. We also didn't have the food. We didn't have this and this and this. And it's crazy. And Jimmy, you're totally right, man. You're seeing tons of increases in parts and everything. And yes, surcharges, right? I mean, it's a good point on that, Jimmy. I like that. But here's the problem. And Matthew says this, but the supply market could open and help combat the supply and demand. You're right, but the supply market takes more time. So remember when the Rona restrictions started loosening, and remember when we were allowed to go back to restaurants? It sounds so stupid when I say it out loud, doesn't it? So we were allowed to go back out to restaurants, okay? What happened though? We had all of this demand right here that was pent up, and the demand can be released instantly. I mean, think about it. As soon as a country lowers restrictions, boom, day zero, people can go out and do stuff. But the problem is businesses take time to get people in because businesses act on a cautionary side. And Jimmy, this is going to be for you, all right, bud? What businesses do is businesses do not hire right away. They do not purchase a ton of goods right away. What they wait for is to see if the trend line starts moving, and then they start reacting on the basis, okay? So what happens is yes, your demand side goes up, and that's what we're talking about right here with the Chinese economy, right? Opening up. It's going to push the demand side up, but the supply metric of it is going to take time. These businesses are not going to ramp up yet until they see that this demand part is actually sustained. So when the United States opened their when the United States lessened the restrictions of the Rona stuff, we saw this, a huge spike of inflation. Chinese market opening up, that's what we're worried about right here, is that we're gonna come down a couple months, okay? Because it takes time, remember there's always a lagging effect. That we're gonna come down a couple more months, maybe we get even lower, but then hey, Chinese demand increases, right? Messes up the whole supply and demand thing that Jerome Powell's been working on. And that since it takes a longer time for supply chains to catch up, that again, you're gonna have all this printed fiat, but you're not gonna have the supply there, which means inflation would go up, and up. So very, very interesting to see how that works. Sam says, okay, so money supply is up, services and goods are down. How do you quickly funnel money out of the system? Honestly, you want to know how, Sam? And that's a really good question. How you do it is by raising interest rates. It's a horrible way to do it. It is a horrible way to do it. It's taking a hammer, just this blunt tool, and just smashing things, okay? And that's what inflation rates do, because think about that. As the CPI data went up, Jerome Powell and the Fed had to react, which meant what? Home loans were more expensive, credit card loans, business loans, home equity lines of credit, auto loans are more expensive. So if you're spending like twice as much on interest as you were before, that's sucking up all of that extra money that went out there. That takes time. So that's what we're all worried about right here, okay? Is we're worried about that once the consumers of China start coming out en masse, that you're going to drive up demand, but the supply isn't going to be there, okay? And so will we think it's going to be as big of a move as we saw when global economies opened up? Not so much, okay? Because think about that. That was a bigger movement. This is a movement of one country, yes, albeit a big country, a big powerhouse country. But this was more as the globe was starting to open up. Arius Wave says, what about interest rates reducing demand? And that's exactly why the Fed does this. Okay, so for those of you out there, and I'll leave this chart up, and you know what, let's do this. Let's put on the heat map, and we'll talk about a little supply and demand, just so y'all can see what's happening in the broader look in the market, okay? Arius says, what about interest rates reducing demand? And that's exactly why the Fed is raising interest rates. They're raising interest rates so that people, A, get money sucked out of their pockets. It's pretty simple, right? That all goes to paying interest, your home loans, you know, car loans, and all the stuff that I just described. But it also, what it does is it has the effect of stopping people. Think of home sales, all right? The hope with homes is this: as we increase rates with homes, it's hoping that what's going to do is it's going to stop the amount of people wanting to buy. Think of when the Rona happened, right? When we started talking about, you know, around this time. Do you guys remember the crazy price that happened? All right. Sorry, I'm just reading some of the comments here. Do you think some of the stuff that happened with homes, that was a Rona-based thing, right? A lot of money thrown into the economy with low interest rates. Yes, and that's kind of the thing we have to think about too. There were low interest rates here with a lot of money into the economy, which drives inflation through the roof. And that's this movement right here. You can see that clear as day, all right? Clear as day. So what I want to focus on is the idea that, yes, the Fed is going to have to keep jacking up rates. In fact, when I did a video on the Fed's last projections, the Fed said this: in 2023, we are not going to be lowering rates, okay? And then that's when the market freaked out, okay? That's when you start looking at this and you start zooming out even further. You can see the markets really started freaking out. Who issues CPI data? That's Bureau of Labor and Statistics. I've got it up on the screen. So for those of you that want to follow along with CPI data, go to Bureau Label, bls.gov/CPI. It's Bureau of Labor and Statistics. That's who is doing CPI data. So when we start thinking about supply and demand, when we start thinking about all these things that are happening, we have to go back to the idea that now that China is opening up, this potential right here could spark an even more aggressive way, or I'm sorry, a more aggressive reason for the Fed to jack up rates even harder. So what you're seeing right now in terms of market optimism, all right, everything on the screen right here, okay, market optimism wise, the reason people are being optimistic here is thinking, well, hey, wait a minute, CPI is going on down, you know what I mean? Like, hey, maybe things are better, maybe supply chains are opening up, you know, stuff like that, right? This is optimism built in. And for those of you out there that don't know, whether it's the crypto market or the stock market, we price action ahead of time, okay? When bad news hits, obviously it can kill the market right now. I do speak French, Sniff. But anyways, it's the focus is that when the optimism that's built in the markets, it's very forward-looking. Pessimism is built in instantly, okay? And it has kind of like a little forward-looking view, but optimism has a much greater forward-looking view. So this is optimism. This is the market here saying, hey, wait a minute. We know the Fed is going to keep jacking up rates, but can we maybe start clawing our way back? Can Bitcoin maybe get back to that 18,000 mark? And thank you, Nico. And To the Moon says, increase rates to reduce demand to curb inflation. It's basic. Yeah, it is. It's very basic, but it's a very blunt, horrible tool. It's like bringing a sledgehammer, you know what I mean, to do that. I mean, just bringing a sledgehammer. That's what it is. So the market is definitely pricing this in. Now, what are some of the concerns that we have, okay? We already talked about this right here. Is Chinese market opening up is going to drive back demand. And remember, a lot of supply chains, right? If you now open up one of the biggest countries in the world, supply chains it's a tough time to keep up with that. And businesses, honestly, businesses are not going to be aggressive when it comes to hiring. Businesses are not going to be aggressive when it comes to manufacturing, okay? They're going to take their time. Do you guys remember when the Rona first happened? And you couldn't find cleaning supplies. Remember that? You couldn't find Lysol, stuff like that, right? Well, and a lot of us out there were like, well, dude, like, how stupid is this? Like, I mean, like, 8:30 a.m., you've got 19 minutes, Matthew, until CPI data comes out and we share it. But when the Rona first happened, we were like, oh my gosh, we can't find Lysol, we can't find this or that. And we're like, how hard is it for these manufacturing plants just to turn up the volume? It's very hard. It is very hard. So, my background is heavy in manufacturing operations, and I can tell you firsthand that I worked for a massive company out there, and it takes time. When we wanted to increase production, okay, and we wanted to increase production, right, you had to add new cells, you had to add new manufacturing lines, but that was something that had a ripple effect, okay, throughout the entire, like, facility. So even if we wanted to say, okay, I'll tell you a story. So we picked up a strategic account client. And for those of you that don't know, strategic accounts are very, very large ones that we base a lot of our business practices around, okay? So what happened was we picked up a client that increased our plant's need, right? The demand from that consumer was about a 10% overall uptick for our volume in this one manufacturing plant that I was at. 10% does not sound like a lot. But 10% means I had to hire more people in manufacturing, the actual like manufacturing segment loops. My shipping department needed more people because now there was 10% more volume going through the shipping and the handling, like the packaging of it. Customer service, I had to come up with a whole new customer service system because I had to come up with, hey, how are we going to take care of 10% extra calls? It goes all the way through. And what happens, though, is that as a business, right, we had the choice. We were like, okay, we're getting the strategic account in. It's going to give us 10% more sales volume and unit throughput. As a business, we were like, okay, can we maybe hire and fill in 5% of that and keep an extra 5% of margins through our OPEX line, all right? We always talk about OPEX, operational expenses. Now, what happened was it took us about 2 months to see what their actual business numbers were, okay? So at that 2-month time, then we were able to go, okay. We've seen that their business is very stable. We can kind of rely on putting people in because as a business, the last thing you want to do is to hire 10% more staff to only then have to let some of them go because you overestimated. Businesses never want to overestimate by hiring more. So if you have an increase of 10%, of product, you're not going to hire 10% more staff across the board. You're going to go 2%, 3%, 5% at max, and you're going to kind of hope to squeeze that margin out of it, which, again, it's hard because it puts more pressure on, Yavo, lead times. Yeah, exactly. Lead times and single hand orders. I'm a Lean Six Sigma guy, so Yavo, you know exactly what I'm talking about. And that's the issue is you can't just do that. Okay, and the other thing too is there's hidden things of waste that happen when you increase your size. Okay, it's similar to law of diminishing returns. Things aren't one-to-one as you scale up. Your chart when you scale up kind of looks like this, and your returns really start flattening out as you increase the size. And so what happens is when you have China opening up and you're going to have now a huge spike in demand, the actual supply, the manufacturing that goes with it is going to be lagging behind. And it's going to not only be lagging behind in time-wise, it's going to be lagging behind intensity. So that delta between the two, the gap, that's where your profitability comes in the businesses and manufacturing out there. So just throwing it out there. Sorry, I didn't mean to go deep into that, but this is kind of something that I'm really big into. Let's see. Damien. Thank you, Damien, for bringing this up. And guys, we got 15 minutes till data comes out. Put your questions in the comments. I'll read them. Damien asks, why do you think it's so hard for businesses to find workers to fill their vacancies? It's not. Don't believe that. Oh my God. Okay, everyone out there, listen up and listen good. Businesses have vacancies and they're not filling them. The reason they're not filling them is because businesses are doing exactly what I was just telling you. As the demand goes up, there's going to be a delay lag of time. there's also going to be, hey, if business goes up 20%, you don't hire 20% more staff. You'll kill your margins, right? So if you get 20% more product, you're going to bring in 5, 7, 8, 9, 10% more people. What businesses are doing right now is they're trying to squeeze as much as they can out of their workers to make up for, hold on, here we go, for this right here, for when things were shut down with Rona. How businesses work is especially, let's just talk about publicly traded, and actually the majority of business, not even publicly traded ones, they work on a 1-year financial roll, okay? And on that 1-year financial roll, let's pretend that the first quarter sucks. Well, you still got 3 other quarters to make up for it, right? Before you start pissing off your shareholders. Speaking of shareholders, I'm watching Coinbase, everyone. Don't you worry about that. But what happens is, so if businesses go up, right, they are down. They've got 3 quarters left in that year to kind of make up for it. Now, what happens if businesses are down for 2 quarters? Okay, they've now got what? The back half of the year make up for it, and that's what it is. So any losses that you are seeing, okay, right now, the reason companies are not hiring, they have job openings, okay, just hear me out, but they're not filling them because they're trying to keep their margins as high as possible, their PBT as high as possible. I talk about OPEX all the time, and I'm not talking about the oil producing, no. I'm talking about OPEX, operational expenses, and let's do that super fast, okay? I don't want to go too deep into the weeds because we're getting around it. What's up, Peter Pure? But anyways, operational expenses have to do with the cost of doing business, right? So what we have to consider here is that if businesses' profitabilities were down during the Rona time, what they're going to do is they're going to lean very heavily on their operational expense part of their budgets, and they're going to squeeze that as tight as they can in order to make sure that their profitability catches back up. So how businesses look, and this, like I said, this is usually done on a yearly cycle. If quarter 1 is down, you've got quarter 2, 3, and 4 to make up for it, right? How do you make up for it? You force your workers to work harder. Have you guys noticed that out there, that companies are expecting more and more from people? I know Jimmy's on here, and what's up, Glenn? Good to see you. I know Jimmy's on here listening, and Jimmy's into manufacturing. His is a family business, and Jimmy knows exactly what I'm talking about. You don't just hire, you don't just fill every position right away and expect things to be good. No, because you always have like this lagging effect, and you always have this backside of expenses that are always there. Now, operational expenses tie into 2 different things, and I don't mean to be dorking out, but this is my field and my background. Operational expenses, right? You've got your fixed costs, right? Your building rent and all that. Your building rent, and that's what I'm trying to say. So as demand went down, as sales went down, remember, your building rent stayed the same, right? So it's not like you got a break in your building rent. You know, your insurance stayed the same, and if not, probably went up. Jimmy can attest to that one. And that's the idea. The idea is that businesses out there right now are not filling the vacancies, not because there's not demand, because we know the demand is there. That's why food prices are up so high, right? That's why lumber was up so high. That's why homes and all that were up so high, because the builders couldn't keep up with the demand. But what companies are doing, they're pushing more of that effort on the worker. They're telling worker, look, you need to work harder. We need 5% more out of you, 10% more out of you. Now, I know Yano is listening, and Yano is a manufacturing engineer. We know that it's not practical to tell people to work harder. That's the dumbest thing in the world. Anyone ever tells you to work harder, you go and give them one of these. No, show me ways how I can work more efficiently. How can I remove waste from the process? How can I move waste from lead times and so forth? All right, where's my choke point? Where is my bottleneck? Okay, and I don't mean to be dorking out, guys, but sure, this is my background. Thank you, Glenn. Glenn even just said what I was talking about. I'm in manufacturing machinist. Insurance has quadrupled. We need a guy, but they're not hiring. Yeah, and they're not going to hire because as these expenses go up, and this ties back into what the Fed is doing, everyone. As the Fed raises rates, okay, think about that. Business loans are more expensive. And the way businesses kind of get around situations like this is that they can use these business loans. They can lean on them. They can lean on this business loan. They could forward push their expenses. And that will allow them to be able to be profitable at this time, knowing that they're pushing out some of their loans. That being said, though, as the Fed raises rates, yes, as the Fed raises rates, what happens? Well, cost of business is more and more money. Oh, and Sam's got a good one. Sam says, okay, here we go. Sam says, yes, they're using AI and they're getting rid of humans. Yep, and we got 10 minutes to go. Yeah, so that's the problem too. All right, so if you want to know inflation, I'm going to show you guys something really, really cool. You guys want to learn something super, super fast here? I'm going to show you something really neat. All right, so what we're going to do is we're going to go, and we got 10 minutes till the announcement. Don't worry, I'll get to it, everyone. I've got several different screens up open here on the side. All right, so here's what we're going to do. We are looking, and we're going to put a 25-year thing of inflation in, all right? And I want you to think about what happened around the late 90s, early 2000s. What happened there, all right? Around the late 90s, early 2000s, the internet became more widespread. Tech became more mainstream. Think of all the dot-com companies, okay? Dot-com companies, everyone out there. Remember, the internet was big like in the mid-90s when people were like kind of dipping their toes in it, but it really didn't get big until the late 90s, early 2000s when all the dot-com companies happened. When dot-com companies came in, what did we learn? We started learning we could use computers for stuff, right? We could do our books, right? Our finances on computers, which saved how many people doing, you know, like just aggregate junk math. That being said, the internet and computers and technology fought inflation, okay? Inflation, another way to think of inflation is entropy. Things going from order to disorder. Tell me this, over the last 25 years, guess what, everyone? Things have gotten harder, right? The government makes it harder for you. Filling out things is harder. Forms are harder, blah, 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 blah. That's the whole sense, okay? The thing is, the internet, computers, was a way for us to fight inflation as a global economy, okay? That was the best thing we can do. Now we're starting to see like the internet, 4G, 3G, all that kind of stuff expand more into Africa and third world countries where it's helping them reduce their margins. After a while, we need the next technological boom to get us through. Right? I mean, once the internet now is spread to everyone, what's the technological thing that's going to help people save money? Tollways. You guys remember that? Come on, how many of us out there, I wish I had change on me, remember that we would throw the change in the bucket? All of those jobs, or we would go up to the window where the nice man or lady there would take our, money and pay for tolls. Well, the majority of them jobs are gone. Walmart used to have cashiers like all over the place. What do they have now? You scan your stuff. You bag your stuff in those self-checkout lines. So the internet and tech has been a way for, as a globe, to fight inflation, to fight entropy, right? Order versus disorder, because everything has a tendency to go to disorder, to become more complicated. That's why the United States government is getting bigger and bigger and bigger, because we are less efficient. When we're less efficient, what do? We throw labor at the problem. When we throw labor at the problem, it drives up expenses. When it drives up expenses, what happens? You have to pass it on to the consumer, which is what we're dealing with right now. Sorry about that. I really dig this kind of stuff, but this whole ties into it. You know what I mean? And yeah, robots, right? Robots are going to be the next wave. So thank you for saying that, Glenn. That was part of my job, was to go into plants and determine, is a plant viable, right? Should we even keep them open? If we do we replace people with robotic systems? If we can't replace them with robotics, can we completely lean streamline the manufacturing place, right? That's my job, okay? That's my background. I'm a Lean Six Sigma guy, okay? So that being said, you're right. You replace it with robots, all right? And yes, Ted Kaczynski had a point. If we're too dependent upon tech, it screws people. So now if we start replacing more industries and people with robots, what happens with people? You have less what I call base skilled labor people in the market, and you only have specially skilled people, engineers. There was a manufacturing plant that I did a project at. I shit you not. Oh, gosh, I probably shouldn't swear, right? I kid you not, okay? It's a company called Autoleave, all right? We did a short project there. Autoleave had this thing where they worked in cells or pods, whatever you guys want to call it. I remember a situation where someone, right away, they had this, it's called a raise your hand system, where they would raise their hand and say, hey, something's not right here. This doesn't feel right in this manufacturing pod. And the pods usually consisted of anything of 1 to 3 people. Very rarely it was 4, but it was 1 to 3 people, okay? So what happened was, if there was a problem in manufacturing, I kid you not, this one worker would, quote, raise their hand. All of a sudden you would see 3 or 4 engineers swarm in, pens, papers, calculators, are all trying to figure this stuff out. All of those base entry-level jobs are being replaced with high-skilled labor jobs, technically based jobs. That now is going to have a bigger effect on the global economy, because you're going to have less people making that base pay. So when someone said earlier about, hey, guess what, we're universal basic income, yeah, you have to watch out for that, and I'm not a fan of that. So there is a point. okay, where we become so technologically involved that we actually start hurting people. There was an art display in the Museum of Art in Chicago, or the Art Institute, and it was about manufacturing, and specifically it was auto manufacturing, okay? And what they said was, the more streamlined we become as a manufacturing place, right, making people act like robots, the more innovation goes to the wayside. Anyone that's ever worked in any sort of manufacturing plant knows it's all very strict, especially any ISO style plants, okay? Everything is strict. What you say is what you do, and what you do is what you say. That really stifles innovation. That's something we all have to worry about. So, whew. Yavo says, retail robots are one thing, heavy industry is different, conveyance and all that. Base manufacturing is very specialized. If you want a job, don't make yourself replaceable. Yavo, here's the whole thing though. Everything is becoming digitized. Everything is becoming robotic. What's up, that one guy you know? Good to see you back here. But it doesn't matter what the size of the industry is. I mean, think, did any of you out there 20 years ago think that it was okay, or that we would be bagging our own groceries and scanning our own stuff? You know what I mean? And New Anomaly chiming in. What's up? Yep, we got 3 minutes till data comes in. Heat map is still looking pretty legit. So right now we're going to see what happens with the heat map when the market starts pricing in the action. But think about that. 20 years ago, we weren't sitting out there thinking, hey, we're going to be our baggers and swipers at Walmart. No, it wasn't a chance. Or when you used to pay tolls back in the day, right? You didn't think those jobs were all going to be replaced with people. One of the projects I did, we actually replaced okay, I'll be honest with everyone here. One of the big projects that I was involved in had to do with customer service. Do you guys know why customer service is all overseas? Because they found ways to streamline the answers, the responses to the most common problems. So they can remove specialized customer service. Customer service people are expensive. All right, especially good customer service people. It is super high business expense. They outsource that so businesses can save money. Hopefully it doesn't affect the customer. That's the idea, everyone. We have to be very, very careful of that. Let's see. She says, I'm in the military, and as things are getting more and more complicated due to tech, it has a massive impact on recruits, as normally people who join don't have great education. And yeah, Welsh, and that's the idea. What's happening is as this world that we're living in is starting to evolve, we're starting to rely on tech more and less on hand stuff. When we rely less on hand stuff, there's a whole segment of the workforce now that just loses jobs. Could you imagine what would happen if we were to completely automate massive industries? Oh, it would be a mess. It'd be a totally mess. Yavo says, yeah, we need to anticipate and front run our industries. I know, man. I know. And yes, Glenn Sakona, old school journeyman machinists aren't being trained anymore. You guys know I'm a big car person. There were car parts that I could not get. Do you know I actually went to a machine shop and had them build me a part that I needed? I gave them my old part. They spec'd it all out, got the old micrometer out, digital micrometer and laser micrometers, and they spec'd it out for me. I guarantee you, 30, 40 years from now, there's no one's going to know how to use a dang lathe. It's crazy, man. It's so crazy. And yes, nanotech is where it's going to be. And thank you, Arnold, for sharing that. Yeah, it's my background. I'm very well into the manufacturing and big into finance and stuff like that. Like I said, I lean on my Lean Six Sigma brain quite heavily. So if you guys wonder why I am the way I am, that's how it is. So what I'm going to do, yes, it's a lost art, and it leads to a lack of innovation. Remember that, Glenn. Anytime we streamline things, from whether it's an engineering or manufacturing standpoint, innovation goes to the wayside because you don't allow people to think outside of that stream, especially ISO 9000 plants. All right, so here we go. I'm going to keep refreshing this screen here. You guys are going to watch with me. I'm going to talk a little bit less here because I want to see the data. Let's see, we're at 7.1, waiting for it. It should be popping up at any time. Come on, data, go refresh. And if anyone sees a quicker refresh than what my segment is, please share it with me. I am looking right now. I have not seen it yet. It should be jumping up anytime. Come on, Bureau of Labor Statistics, help us out here. Let's go 6.5 or less, everyone. Let's go 6.5 or less. I am waiting. It looks like it looks like it's 8:30 right now. We should be seeing what is happening right now. Like I said, I'm just going to keep refreshing it, keep seeing what happens. If we're under 6.5, you're going to see the market rally continue again. Oh, here we go. 6.5. Called it, everyone. We got it. 6.5 is the new data. Let me switch this over. I'm going to put this up in the chat. 6.5 is in. Here we go. All right. Here we go. 6.5 is in. All right, now let's take this. Let's refresh this bad boy right here so that you can see it. They're going to switch it up over on this screen. We're going to now start watching the market. 6.5 is in, everyone. The market should continue to move on the positive end because of this data right here. But like I said, I'm going to be very cautiously optimistic because remember, with China opening up, we could really mess this up. This is definitely a sigh of relief. CPI data came in at 6.5. Let me get a quick drink right here. Branched chain amino acids, everyone. I still got to work out this morning. Oh, man, this is awesome. This is really freaking good news here. All right, so what we're going to do, let me drink this here super fast, and then we're going to dive into what is tying into this whole 6.5. All right, everyone, and that's why you hit the like button. That's why you subscribe to channels like this, because 6.5 is what we've been calling this whole time. All right, let's start it off with food. And just so you guys know, you can go into this data set and you could dive even further. In fact, if you go to Trading Economics, the U.S. inflation stuff, you can dive with even different reports that they have. We're going to keep it here. We're going to start with food. All right, so food at home rose 11.8%. Food away from home, 8.3%. Let's take, holy shit. Okay, this is what we're nervous about, everyone, is stuff like this. Cereal up 16%, dairy 15.3%. That's crazy. Non-alcoholic beverages, soda, your waters, your junk like that, 12.6%. Let's go to energy. Energy commodities. Look at that. That's the break. This is the movement right here that caused a lot of this as energy commodities are going down. Only went up 0.4%. Oh, here you go. First time, guys. First time ever. We've been seeing this in a long time. Energy commodities of gasoline down 1.5%. This is going to be a good golf clap, everyone. 1.5%. Now, look. Issue, though, is we still have oil up 41.5% year over year. So energy. Now, let's look at this. Let's look at services, less energy. Transportation is still up. Yeah, we kind of figured that. Let me go back to that. Sorry about that. Medical care down 4.1%. Shelter. We've been waiting for shelter as well to go on down. All right, give me a second here. I'm just going through everything. Commodities, here we go. This is what we talked about the last time with CPI data. Used car market bubble has popped. Huge relief out there, everyone. Huge relief. New Anomaly Productions chimes in with a $5 donation. Thank you very much for that. Says, I heard eggs can be expected to be 80 cents each if the current trend continues. Yes, they're citing bird flu, avian flu that is wiping out eggs. By me, right now, eggs is right around that 50 to 55 cent a piece. That's if you buy a bulk five dozen thing. But this is huge. This is huge. You see this right here? This is massive. This is used cars and trucks going on down 8.8%. That is a huge relief. So now let's see. We've got the markets reacting. We're going to go to XLM and XRP. All right. Got it up on the screen right now. Let's refresh it and take what's going to cost more, the chicken or the egg. At this point, a chicken will pay for itself within a couple months quite easily. You can see we're still at 7.9 right here. Let's see what Bitcoin is doing because they're a good one right here. The most recent candlestick on Bitcoin is down just a little bit. I'm not saying that. Yeah, and Timothy Bolton, I'm with you on that, man. I'm also saying bird flu, my butt. I don't believe that at all. That's very interesting. So we're watching Bitcoin here as well. Bitcoin sitting at 18,200. XLM is 7.9. We were really hoping for it to be 8. All right. Let's see. Let's go to XRP. Let's switch this up to the candlesticks here. Candlesticks for XRP. You can see the market was hoping for more. This is what this is telling you. These candlesticks right here, this is the market telling us that they were hoping for more. Let's switch this out to a more quick time period here. Move this up a little bit. These movements, I've got this now set to the 5 minute, okay? Here we go. On the 5 minute, you can see the markets wanted more. The markets are not happy with 6.5. Let's switch it over to XLM. Let's go to the 5 minute here and see the same thing. The markets are not happy with 6.5. Exactly. Buy the rumor and sell the news is right. If 6.5 is what we were at, this action that you can see Bitcoin running up here, this was the rumor. This is the news right here. And Bitcoin is starting to pull its way on back down. Here you go. The candlesticks right here are jumping right now on the way down. So good news is, yes, we have CPI data that came in, but certain things are still high. Look at that. New vehicles are still up there at 5.9%. Alcoholic beverages at 5.8%. We've got Bitcoin right now. The crypto markets wanted more. Crypto markets were not happy with 6.5, everyone. The honest truth right now. Global markets are happy with 6.5. Here we go. We've got the update on this screen for you. Hey, Joseph, my expectations were actually right. I said 6.5. Now, what you could see right here is the market priced in this optimism early. I'm going to go to the Bitcoin chart because it's going to be a little bit cleaner for me here. Give me a second. Markets priced this action in last night, early this morning. So you can see that this action right here, buy the rumor, sell on the news. Now, what this is going to do is this is going to be very interesting because now Jerome Powell and the Fed have to think this. Hey, we've got China opening up right here. Is China going to undo all of the action that we said? 6.5 I said, and we will continue it. And I said that yesterday before this action happened. So Joseph, as much as you're trying to throw shade, your timeline's wrong. Because I said, hey, we're going to continue that. And here you go. We continued the action. So Joseph, when I made that video, and boy, I'm going to start burning you on this channel. When I made that prediction, that was around here. So yes, Joseph, we are still up. In fact, I'll draw you a line. I'll get my crayons out for you because you can see when we come to drawing this, and let me draw it right here. We're going to make a nice little line. As you can see, yep, the markets are rallying on it. You can't focus on what's happening at the instant. You have to focus on the trend line, my good man. So anyways, what we're looking at right now is the market, yes, did price in that positive action, as you can see by the trend line here over the last several days. All right, let's take a look here. CPI data, what else do we got? Everything else seems to be pretty good, but we're at 6.5. That is what the expectations are. We wanted expectations are better, and we're starting to see action move on up. XRP right now is at 36.1. We're going to slide it on over to the heat map to see what happens. Yeah, the whole point is, yes, they fell month over month, year over year. But what we're looking at is we want more optimism. The reason we want more optimism has to do with China opening back up on their market. We're not rallying with low December inflation. It looks bearish. Bearish is right now looking at this. Bearish is looking at, and I'm going to have to rechange this because we got updated data. Bearish is thinking that, hey, China is going to undo the work that we're doing. When we put this back into perspective, let's put this into perspective just for everyone. We're going to go here. We're going to go with 5-year. And give me a second. Let me move this on over. All right, here we go. At this point right here, you can see that we still have a ways to go to get to 2.0. Plain and simple. Plain and simple. Ways to go for 2.0. And for those of you out there saying, hey, what happened if 6.5? Guys, I don't know. It's so hard to get people to explain this. What do you think this move right here? This was the market pricing it in at the action. Things, oh my God. It's hard to explain. But yes, Twitch, we are at 6.5. Thank you again, Twitch, for texting me last night. Bitcoin made the move early. XLM had the move. Let me zoom this out just a little bit to the 5 days. XLM had the move early as well. And same thing with XRP having the move early. This move right here, as you can see, overall, when we look at it, yes, we are above where we were when the video was made. So now we're looking at a broad look. We need Bitcoin to hold 18. ETH, I mean, if we can hold above 1350, we will be happy. Don't freak out. I'm going to switch this out right here. Give me a second. We're going to go to the 1 hour time frame. This is 1 hour. Don't freak out. I just switched this to 1 hour. Same thing. Buy the rumor, sell the news. That is the action. The market dumped quick to back to an up almost instant day, no different to most days. And let's take a quick look at Coinbase. And the reason I focus on Coinbase is, again, now this is on the stock market, representative of the global crypto market. We're still up in pre-market action here, 0.64%. Right now, give me a second. What else did I have? I had Silvergate. Silvergate is up as well. They've been decimated by FTX with their crypto action. XLM denied again. That trend line, we need to break it. That's what I was hoping, Mep. I was hoping that XLM would actually be above this 8 cents and take the news. The market, hey guys, this is it. They're selling it on the news, plain and simple. We wanted something even better, and that's what the markets are telling us. They want it better because they know Jerome Powell and the Fed are now going to have more pressure put on them to thwart and negate the China action. All right, now if we look at these items, you can see that food away from home is still high. Food at home is still high. Give me a second here. I got that up. With cereal, dairy, other food at home still being up double-digit percentage. Non-alcoholic beverages as well raising on up. Now let's take a look at energy. Energy is something you need to pay attention to. We go to the commodities line right here. We're going to click on that point 4. Here we go. Oil is still up, but gasoline is down 1.5. That being said, if we look at if we think about what's happened with gas here with January, gas prices in January went up, oil prices went up. Why? Because they're pricing in China opening up their economy. What else can we take a look at? Let's go at all items less, commodities, energies. So you could see that nothing too crazy. You've got new vehicles still up 5.9. I get that. What is this? Alcoholic beverages up 5.8, tobacco up 5.5, with used cars being the best one sitting here going back down to 8.8. I thought Danelle from XLM had some good news or something today or tomorrow. Twitch, they're going to hold off on that until they get to the World Economic Forum. I've got that right here. That is happening between the 16th and the 20th. But right now, for everyone out there that's watching, CPI data came in at 6.5, meeting expectations. So when you look at it, XLM could not hold, and the market is starting to claw its way back. XLM is clawing its way back from that. And oh, wait a minute. For those of you out there, there you go. People sold off, and it looks like they're getting back in. Yeah, dump tether. That's not a bad one, CZ. Dump tether. I kind of like that one. But you can see it right here. It is already starting to pop on the way back up. So people sold the news. That's why these live streams don't stop at 8:30. We continue to show you what the market does after. Interesting, isn't it, everyone? Bitcoin is probably going to be doing the same thing here. Let me clean out this line right here. I'm going to go to refresh on Bitcoin. Let's just take a quick look at Bitcoin. Bitcoin, you can see from the dip of this candlestick right here, it's already starting to retrace a little bit. Joseph Hayes says, in your opinion, how cooked are these numbers that they provide? How do they alter them to get the outcome that they want? Poverty for all. You know, I honestly don't know in terms of like cooking the data. What I can tell you is this. If you try hard enough, or if you extrapolate this or extrapolate that, you can make any data set say whatever you want. God's honest truth. You can make any data set say whatever you want. That's the performance for 1 hour. Let's make it into 1 day so we can show everyone. Yep, here we go. We've got the market over the last 24 hours still green. I would like to see ETH. You can get your chicken NFT. I like that one. You can see ETH still sitting at 1386. XLM, right, hit that low after the announcement. Here's the announcement. Take a look. We're already back up. So here, if the announcement was this, and I'm going to show you guys something real quick here. Let's go to this, and we're going to draw this, and we are going to doodle. So if this right here is where the announcement was, actually, I'm going to clean that up. 8:30 is right here. If this is where the announcement was, we're right back at the announcement right here. You can see from the low, the next candlestick started moving it on the way up to here. So we are still doing very, very well. XRP has a very similar story. Let me just kind of refresh here on everything. Give me a second here. Yeah, we do. We're going to have a whole day of crazy ahead, and it's going to be crazy until Jerome Powell and the Fed come out with their next rate hike decision. 36.8. So if you look at 36.8, yep, guess what? We're not even talking about a day's worth, so we're still up ahead. John Francis says, we are toast. Inflation won't go to 2% until next year. Oh, yeah. Oh, we've got a ways to go. For what everyone is watching, what John's talking about is this. Inflation here needs to get back down to 2.0. It does. It needs to get back down to 2.0. Everyone's excited because you see how like quick the slope is on the way down. Don't get me wrong, that's great. But the problem is that great has to get all the way back down here to 2.0. So when you look at the chart, give me a second, I'll clean all this up. We were talking about China earlier and the markets opening up. what we're looking at, okay, this chart here needs to get back down to 2.0. This is going to take some time to get to that 2.0 level. We've still got a high. Glenn, I'm going to say he's going to come in at 50. That's my thing. I think he's going to come in at 50. I think the pressure on the Fed is this. Yes, are we happy? And I'll clean this up. Are we happy that this movement right here is happening, that we're going on the way down? And the way you want to look at it is you want to take your peak number, you want to bisect the number, and I'll do that right here. You want the time frame. Think of the time frame it took to go from here to here in terms of this. Take that same segment. That's what you're looking at. So what's going to happen is Jerome Powell and the Fed are most likely going to think a 50 basis point hit, all right? A 50 basis point hit. Yeah, if your chicken dies, so does your NFT. That was pretty good. But what we're looking at now is that, yes, we're at 6.5, but this is the goal down here. So look at all of this room we have to make up for. All of this room. Now, the better CPI data is, the more we're going to have to do it. Give me a second here. You could see XRP climbing their way back up. Actually, XRP is higher than where they were when the announcement was made. Interesting, everyone. So you had the people that sold off the instant the news came out. And then you can see we are actually higher up than when the news broke. Interesting. Same thing with XLM. Look, I've got XLM. Ooh, don't want that. I'm going to get rid of that. XLM up on the screen. You can see right here. They are actually higher than where they were when the announcement was made. I like this. I like this a lot. Damian Rosenbaum says, my first time watching live. I enjoy your insight. Most YouTube channels on crypto do not provide the technical to go along with their information. Gonna delete a few of them after this. Well, I appreciate that. And I genuinely appreciate that, Damian. And that's what you have to watch for. That's why I told everyone. I do the live streams like this. I do a chunk of time before the market, right, or before the announcement happens. We do at the announcement time, and I don't shut the stream off when the announcement happens. I keep the stream going to show you what the real traders are doing out there, because everyone knows buy the rumor, sells the news. But check this out. We already went back up above it where they were. John Francis, get with a like-minded community and come up with a plan so when stuff pops off and your community are in a stronger position, don't let it make you a slave. Ooh, well said. Very well said. I like that one. Overall, looking at the market right now, we've got Bitcoin still above 18, Ethereum 1366, XRP 36.7, XLM still under that 8 cent mark. I would have loved to have seen XLM, and yeah, it depends on which metric you're looking at, but they are really climbing back up. There we go. Look, XLM is making the move. So who is that person out there that said, hey, the market isn't going to move from it? Because guess what? When I zoom out, and when I zoom out to when that action was happened, yes, we did make the move. Now, granted, could we hold the 8.2? No, not with XLM. But when you look at your Bitcoins and so forth, boy, that looks like the market is really, really moving. Twitch says, if I was smart, I would have set an alarm so I could got in on the dip. Usually, and that's what happens. Matthew says, is the uptrend likely to continue until the rate gets dropped? We're going to see other economic information to come out. I would honestly say this, as long as we don't have any stupid things happen, all right? As long as we don't have any dumb FTXs, Celsiuses and the like, we'll be okay for a while until we see where the China data comes in. Because remember, data's lagging, okay? So what we just did right now, we just talked about December's CPI data, okay? You get my point? So think, if China just opened up right now, they opened up, what was it, on the 9th or 10th of January it was when they technically opened? That means when we get February's data for January, February's release for January is only going to encompass 2/3 of the month of China opening. And we know it takes a lag time. There's always a lag time. Like you can see, when we opened up the economy, there you go. That's the action. We're waiting to see if that happens with inflation with China. Is China going to mess up the supply and demand metric? Luan Williams says, morning, all morning, Luan. Jason Vitorino says, Klaus, you're top notch. Thanks for hosting this live. No, thank you very much. Matthew asks where Josh is gone. I don't know where Josh went. Who knows where Josh went? Let's see. Oh, Miguel Santos says, good CPI and good news from Davos coming. Okay, for everyone here who's an XLM fan, I'm going to say something, all right? I'll say it to y'all that are watching the live stream, and we're going to talk about professionalism super fast. I repeat, I am not going to make any videos regarding the announcement that Stellar is going to make at Davos. I do not believe it is professional for me to speculate on any specifics, whether it's right or wrong. I believe that Stellar deserves the right, and I believe they've earned the right to make the announcement and have the thunder for them itself. All right? So if there's any channels out there that are going to start predicting what the announcement is from Stellar at Davos, it is completely unprofessional, extremely unprofessional. That is their time in the sun. So do not look for me doing a quote, what are they going to announce prediction video. I just said they got a big announcement because they're bringing their comms team and their products team. It is then now Stellar's job from that point on to take the reins and to deliver the announcement of what their launch is. It would be completely unprofessional of me to give any sort of preemptive thing on that to take any thunder away from them. So do not look for me to say, oh, this is what they're going to announce. I got a pretty good idea what they're going to announce, but I'm not going to do that. I think that's completely unprofessional. Eli says, come on, people, 300 people watching, only 95 thumbs up. Yeah, keep the thumbs up going. Yes, Twitch Radio, thanks for asking it. Twitch says, would you be making an announcement or covering it after the fact? Yes, most definitely. After the fact, I'm definitely going to do something on it. But for those of you in the know, we pretty much know what's going on. It's not professional. I'm not throwing shade at people. Just, do you remember when Stellar launched their MoneyGram program? Do you remember when the program happened? And oh, look at it, guys. XLM is higher than where the announcement is. Holy crap. Like I said, what a joke. Come on. But anyways, remember when Stellar did the whole MoneyGram announcement? And remember there were people out there that said, hey, the program didn't work, and made it public? That was bad. That was a soft launch. When Stellar and MoneyGram did their thing, when it went live in quotes, that was a soft launch. You do a soft launch so that if there are bugs, if there are kinks, if there are this is or that's, you know what I mean? You give time for it to happen. You don't throw shade on people at a soft launch, right? Like when a restaurant does a soft opening, you know that, hey, maybe the waiters they don't know where all the stuff is. Maybe they don't have the cook times down, stuff like that. You never want to throw shade at people during a soft launch. That's their time to work out the kinks and to kind of get things in the right spot. So for me, you are not... CZ says, Klaus is wrong about me and Binance. No, I'm not wrong about Binance. But anyways, let's see. So anyways, my point is that Stellar is going to have an announcement while they're in Davos, okay? That is for them. That is not for me to do any speculation. I'm not going to garner any views. I do not want to make any money off any preemptive announcements. That is all for the Stellar development team to take that time to be in the center stage, to be in the big, spotlights, to announce whatever product they're going to discuss. And remember, they're bringing their comms team as well as their product team, all right? There's a reason they brought those two. So like I said, I'm not going to be doing it, okay? I'm just going to be reporting it as the news breaks and after it happens. Now, let's go back to this. Like I said, at 8:30, that's this right here. Guess what? Market's pushing up, everyone. That's right. Davos is the 16th and 20th of January. Boyval. God, I can't say it. My bad on that, messing up that name. But anyways, my whole thing is that, what's up with Genesis? So Genesis halted earn. So when they halted earn, their agreement says that they have to get paid back. So they didn't halt earn, I'm sorry, they ended earn. They halted it a while ago, but yeah, they ended earn, which means they got to get paid per their agreement. Who is he calling the dump king? I don't know who the dump king is. Let's see. CZ Binance is looking to hire 2,000 more people so they got money. Mike, John, you can't believe that. You cannot believe that. I'll put it to you this way. How does CZ have a magical formula that no one else does? I've gone heavy over the books of Coinbase and other exchanges out there. Not going to happen. John Francis says, when is the next CPI data? Oh, I got your back. Thank you, John. The next CPI data for everyone interested is going to be February 14th. Valentine's Day. Oh, God. Valentine's Day CPI data. No, boo. Don't make it Valentine's Day. No, it was Valentine's Day the 15th. Oh, shit. Hopefully my wife didn't hear that. February 14th, 8:30 a.m. I think Valentine's Day is maybe 15th. I don't know. There's a story I had in 8th grade that screwed me up on Valentine's Day the whole time. But 8:30 a.m., February 14th. XLM is rising now. I know you get this question, but I was wondering how much XLM should How much XLM? It's all based upon your threshold. It is. It's all based upon your threshold. Bitcoin looking good, everyone. I kind of like it. And I know I get it with Bitcoin. I'm not going to, I'm not one of those big Bitcoiners. But look, you can see from the action of the announcement, Bitcoin clawing their way back. XLM above the 8-cent mark. Yeah, Valentine's Day. There was in 8th grade, there was a girl. She was born the day before Valentine's Day. And her 8th grade project for one of our language arts classes was like a pre-Valentine's Day disappointment. It was something like because her parents wanted her to be born on Valentine's Day, but instead she was born on the day before. And anyway, since then, though, my whole life, I always screw up on what date Valentine's Day is because she did the whole thing on it in 8th grade, and it just messed my mind up. No, Michael O2, it's good news. We came in at 6.5. If you see here, the line up on the screen, all right, I've got up on the screen. Right here, this line right here is the price that Stellar was at the announcement, all right? You can see we are moving on up from the announcement. What happened? You had a whole bunch of pessimism people sell. Thank you, Wes, the 14th. That means her birthday was the 13th. Jillian Thaneway, if you're watching out there, doubt it. But anyways, yeah, see, Jillian Thaneway. Yeah, see, I remember this stuff from 8th grade. That's kind of creepy. CPI data came in at 6.5. Again, it looks like the worst action happened all the way back in June. John Francis says, housing might crash if interest rates keep climbing. Yeah, housing is an interesting one. The dynamic with housing, though, is a little different because remember, private equity groups that have cash are the ones that are buying homes and keeping rental rates high. So if private equity groups still have cash to avoid paying the interest rates, they can keep the housing market up quite a bit higher, which would be really, really rough. Digital Origin says, it's so easy to think you're going to get rich by pushing a button every day. Get real. No, it's true, man. It's very, very true. I think a lot of people out there are getting the idea that crypto markets are sooner or later going to trade a lot more in line with stock markets. They really are. The volatility is going to be a lot less, right? The kind of reverberations of the market are going to be less, and we're going to be operating in a much more tight market. Gold 1900. Oh, don't trade while golfing. Thank you. Everyone knows I'm a big gold person. Let me just look something up real quick. Hold on. We want to go to Yahoo. We want to go to here. We want to go to DRD. DRD 844. Daddy is happy. Yes, Daddy is very happy. I'm a big DRD gold holder for those of you that don't know. I'm a massive DRD gold holder. Twitch Radio says, by the way, today is my 10 years with the wife. Should I get her 10,000 XLM? Tell her to hold it for 10 more years. She'll probably kill me. Yeah, no, don't do that. Don't get your wife crypto. Don't. That would be bad, Twitch. All right, man, that would be bad. Digital Work says, I believe XLM is going to be more profitable than XRP, but of course we never know. What we realistically need, we need the court case to be over, everyone. We do. We need the court case to be over. We need more clarity in the market. And look, ETH is getting back up. Look at that. ETH is getting back up to 14. Would like to see. I know. I'm not an ETH fan. But remember, there's a lot of money tied into ETH, okay? There's a lot of people that use ETH as collateral, and that could bring the whole thing down. I'm a physical gold holder as well as gold derivatives. I love me some DRD. I love me some DRD gold. DRD gold can just keep going up and up and up, and I'm going to smile all the way out there. Ooh, that makes me feel good. I like that. Gold at 1900. XRP right now. Look at that, still moving on up. So what happened to the people that said, hey, Klaus, what happened at 8:30? It sold off. That's because you stopped watching at 8:30. That's because, like I said, your IQ has to be this high to ride this ride, and tippy toes don't count, my good people. But here we go. This is seeing some good movement right here. Sergio Madrid says, what if XRP loses, it's going to force any crypto company out there that wants to stay open to register with the SEC, and the burden of demand, the proof is just rough. Is very, very rough. And a lot of companies that are crypto companies and crypto projects would not be able to meet the burden of proof with filing with the SEC. So just thinking about that. John Francis says perhaps XLM will be backed by silver. Don't look for any cryptos to be backed by any precious metals. Don't look for it. Do not look for that. They're two different demons altogether. Two different demons altogether. But here we go. The announcement right here, and I'm going to draw a little bit line because sometimes it's fun And actually, let's go to drawing tool. Give me a second here. We're going to doodle. So this was the announcement right here. You can see since the announcement, yep, the market is moving on up for XRP. Let's do the same thing right here. Hold on a second. Same thing with XLM market moving on up. Interesting. By the way, DRD equals big money for long holders. Yeah, DRD is legit, man. DRD, like the only reason DRD is legit, I did a P&L deep dive. I've actually been into DRD for several years, and DRD is another company. They hold a lot of cash. And when companies have cash, they don't have to pay the high interest rates that you're seeing central banks all over the globe ratchet up. Like I always tell everyone out there, cash is king. The reason cash is king is because when you have cash, you don't have to worry about interest rate hikes, do you? If you have cash, you can pay for homes in cash, which means you don't have to worry about crazy rates, right? If you have cash, that means you have more bargaining power than people with loans. Oh, interesting, interesting. Welshie, love what you just said, Welshie. Welshie says, I think the next bull cycle will be when crypto trades more like stocks, and countries should have legislation for crypto. Yes, I'm Welshie, I totally agree with you. I totally agree with you that once you get more regs in place, you're going to see that happen. And what's going to happen is we're going to start going deeper and deeper into information. Give me a second here. Coinbase 10. Give me a second here. Coinbase filings. Hold on. I just wanted to show you guys something really quick here. Hold on. I don't want 2023. I want 2022. I don't want changes in benefits of ownership. No. Let's go to this one. All right. So this is what I want to show you guys. This is what I'm really looking forward to, okay? So what happens is, all right, yes, unsecured debt is a joke. Well, insecure debt is a joke too. That made me laugh, John. Thanks. Good day, guys. Yeah, this is definitely a good day. Like I said, we hit 6.5. We're going to be okay. And I think I even called 6.5 like a few days after. Thank you, John. I really appreciate that. I do take a lot of heat because there's a lot of people out there. And thank you, Petey, for throwing me some good vibes as well. There's a lot of people out there that just don't understand finance and the way that these economic things happen. They want instant results. That's why everyone here sold off, and then all the smart people are like, nah, we're just going to keep buying. No problems at all, Klinsky. I'm glad I could help you out. But here, if the let's pretend, all right, let's just pretend magical world. If XRP were to lose the court case, okay, and be deemed an unregistered security, they would have to register. They would also have to start providing more information, all right? Here you go, all right? Here's the issue. The cool thing is when companies register with the SEC, they have to register for everything, financials and all that kind of stuff. So like, for instance, Coinbase. Because Coinbase registers with the SEC, because I can go into DRD's financials. I'm such a happy guy today. You guys have no idea. That's what I said. I think I'm going to take a few days off. Digital Orgy, am I from Chicago? Yes, I am. Chicago suburbs. Thank you very much, Digital Orgy. But here's the deal. When companies register with the SEC, you've got like tons of data. Look at this. I can scroll down. There is so much juicy data that you can go through. So for those of us that know how to read the Q's and K's and all that fun stuff, we can actually go into your financial statements and we can actually start looking at the data. Hold on a second. I just lost my spot on my screen. Hold on, guys. Sorry. I lost my spot up on the screen. Dang it. But anyways, what you could do is you could go through all this stuff. Let me just refresh it here. Yep, we're going to reload it. Sorry about that. So what you want to look at is when these companies register with the SEC, you can actually start looking into their P&Ls, okay? So like for Coinbase, the reason why Coinbase went down so much is because once you register with the SEC and you file these things, you can actually look in the filings of the financials. So for instance, Coinbase's revenue was $1.3 billion last year for the first 3 months. Coinbase's revenue for this year was only $590 million. Interesting. Oh yeah, Digital Orgy. I grew up Chicago suburbs. I lived there for my first 30 years, and I've moved a whole bunch of places since. Love Chicago for trading. But anyways, that's what you need to see. So for instance, here's the other thing, right? You guys want to know why Coinbase is getting knocked down to the ground? It's for this right here. Because the first 9 months of 2021, they made $406 million in profit. The first 9 months of 2022, they lost $544 million. So it's actually being registered with the SEC is not such a bad thing. This gives us further insight. So you know how those of you, no, I'm not going to go all Forrest Gump on you guys. No, I'm not. I'm not. I may take a few days off here soon though. But what's interesting is, like, you know how like CZ is like, here are my proof of reserves. Proof of reserves are basically like, here's my bank account balance. Okay, cool. Bank account balance doesn't mean anything because look at Coinbase. 1 year they were making 406 million. The next year they lost 544 million. All right. You need more information than just proof of reserves. You need to see here what your revenues are, what your operating expenses are, because you can look at transaction expenses, salary, labor, sales, marketing, general administration. See what I mean? You need deeper information like this. All right. That's why I know it sucks. Trust me. When people talk about like the SEC, Gary Gensler, it's not that they're a bad organization. Okay. It's the fact of how they're regulating crypto is bad. They're trying to kill crypto with their over-regulation. But because of the SEC, we're able to take deeper dives into the books of these companies and see actually, well, wait a minute. Okay. Yeah, thank you, Digital Orgy. That's a really good idea. But what the problem is that the companies, right, if they say they have one, let's just say a company like CZ says, hey, I've got 1 billion in cash. Okay, cool. That doesn't tell us, though, are you burning 100 million a month? Where maybe you only have 10 months of money left? Are you making 10 million a month? And that's the thing. That's why registering with the SEC is not a bad deal. Not a bad deal at all. Matthew Withrow says, gotta go to bed. Thanks for your service, Klaus, and breaking it down. I appreciate it. Yeah, thank you very much, Matthew, for watching. And thank you, everyone, for taking the time to watch and be part of this. I really like this stuff. And, oh, gosh, Klaus, stop drawing. I really do like this stuff. I like presenting. Now, let's just kind of keep in mind, though, okay, that there is heavy pressure on Jerome Powell and the Fed to keep on those aggressive 50 basis points hits. 50 basis points are rough, especially when they're back-to-back before, right, with 75, 75, 75. We need, see how this number is right here? We need this number to get all the way down here, back down here to 2.0. So if we go to our drawing board and let's clean her up a little bit, everyone, what we're really
looking for, and this is why markets are going to be like, hey, this number here needs to get to 2.0. 2.0. Rodwell Nobrega says, Klaus, you're educating us, but it makes us laugh. Yeah, that's kind of the whole thing. So one of the things I learned about dealing with people is you have to make information fun. If you don't make information fun, people just not want to listen. And the same thing, that's dealing with employees, you know, stuff like that. Even dealing with kids, right? Like if you want your kids to do something, try to make it fun. You know, then more people listen to you if you make it fun. If you kind of throw a little pizzazz in there. Kaleidoscope says, thanks, Klaus, for your time, effort, and energy. I appreciate it. Digital Orgy says, I like me a happy Klaus. No, I know. It's hard. It's hard because there was just a lot of negative news. From the time FTX happened, everyone, it was rough. It was so rough. And, oh, man, it was bad. It was bad. There was a lot of negative news. I was taking a lot of heat for reporting news. People were blaming me for the market being bad. And I'm like, dude, I'm a news channel. What do you want me to do, man? Digital Work says, will you do a live stream during the next CPI report? You better believe it, guys. This stuff is fun. So I will make sure that Valentine's Day morning, I spend it with you all. Because the next CPI data report is coming out on Valentine's Day, 8:30 a.m. Eastern Time, February 14th. Chaka Japhet says, good day. What do you think about the CPI report? Barrel Tech, CPI came in at 6.5. Markets are moving on the way up, as you can see here. Honestly, here's the deal. CPI came in great. It did. 6.5. We had a delta of 0.6. So I want you to think of what that means. That means over the last two reports, we had a reduction of 1.2. That's awesome. That's really, really good. The problem is, though, and when we zoom out, we have to understand that, yes, even though we're going down, we've got a huge chunk left. That's how much we have left, okay? So to clean this up, to make it look like, the goal for the Fed, and I'll draw it, is right here. So you can see, even though we're going down quick, we still have a large chunk left. PD Pierce says you should do a live in the afternoon sometime. I do. I kind of share them around a little bit. I'm definitely going to be doing a live stream on Next big live stream is going to be February 1st, okay? February 1st is when Jerome Powell and the Fed announced their rate hike. So same thing is going to happen, okay? We're going to live stream before the information happens. We're going to, and now the Fed, I'm going to give you guys some insight here. The actual amount that the Fed raises their rates is going to be done at 2 p.m. Eastern. Jerome Powell actually goes on the mic, I got it up here, goes up on the mic at 2:30 Eastern time to give his comments and to answer questions, okay? So what we're going to do as a channel is this, all right? We're going to start this the Fed's stream. We're going to start that early, all right? We're going to start at probably like 1:45-ish, 1:30. We're going to do exactly what we did here, okay? We're going to watch the information early, and then what we're going to do is we're going to then jump in. We're going to see what the announcement is at 2 p.m., and then we're going to listen to Jerome Powell and the Fed talk to see how he says, hey, what is coming down the pipe, all right? The biggest action is not necessarily Jerome Powell and the Fed saying, hey, we're going to drop a 50 basis point hit on you. The bigger action when it comes to the Fed's announcement, which is going to be February 1st, has to do with Jerome Powell saying, hey, what is the forward-looking statements, right? What are we thinking? What are we looking at on that? That's the way to do it. Wrote her a poem with AI. That was awesome. I like that. Yeah. No, Hallmark holiday, digital orgy. The Hallmark holiday of them all was Sweetest Day. I was like, dude, seriously, like, we just had Valentine's Day. You need Sweetest Day? Like, come on, man. Jeff here, I'm with you. Celebrate on your own terms. Yeah, I'm with you on that. I'm still a guy that, you know, I like to open doors for my wife, and, you know, we go out when we can. You know, maybe it's Thursdays some days, maybe it's Tuesdays, maybe it's Saturdays. It's when we can. Yeah, celebrate on your own term. Let's see. PD Pure says, I'm glad you said that because sometimes YouTube doesn't always notify me. Yeah, I got your back, guys. And what you'll notice, give me a second here. I'm going to open up something real quick. Give me a second. Hold on. So what you guys will notice is leading up to it, okay? What I do is I actually gave people the information a while ago, all right? See this video? I did this video here January 5th, okay? January 5th, I did a video that said one big event, and that was talking about CPI data. So what I do is I usually give people a date, all right? Like about a week out, I start saying, hey, start thinking about CPI data, start being prepared, start paying attention to charts and news, and then usually a day or two before, I do the what the date announcement video is, just so that everyone can keep up. And the date announcement report, all right, I usually go into more depth of what the expectations are. Hey, if the market hits this, it's going to hit this. The other thing that you guys definitely keep a lookout for, and just kind of gives you an idea, is big dates. I've got them up on the screen every month, okay? Usually the last couple days of the month, I do a video where it's got a calendar of all the big dates that affect crypto and stock markets out there. Very in-depth stuff. Like I said, I do one every month that covers the month ahead. That way you know when CPI data is. You know if Jerome Powell is talking. We've got two big dates coming up. Hold on. I got it on my cheat sheet right here. Two big dates coming up. January 30th is library penalty hearing and BlockFi auction. So just throwing it out there. Always keeping you guys up to date. Crypto Ninja, what's up, Crypto Ninja? Crypto Ninja chimes in and says, Klaus, do you think today's report is good for crypto? Yes, I do. I think it is good for crypto. And for those of you out there, the reason why I think this is good for crypto has to do with this right here. Used car prices going down. This is the second month in a row that we've actually seen used car prices go down. That is awesome. I know it seems weird. People are like, well, wait a minute. Why is it so big that car prices are going down? Well, think about this. Used car prices going down, what's going up? Interest rates, right? So at least people now that don't want to be in the new car market, because there's a lot of consumers out there that don't believe in buying new cars. That means now people that are going into the used car market for purchases, they're not going to be paying as much because the prices of these used cars are going down because the supply of new cars is going up, and it's hopefully combating some of the inflation hikes, right? So if we see used car prices going down by 8.8%, this is pretty good. And Alexander, I'll get into it. Give me a second. If used car prices go down, all right, but the rates are going up, those are going to kind of counterbalance each other. Alexander says, Klaus, are you ignoring this topic about crypto in Russia and other countries? Is it only the USA in your world? No, God, no. God, no. Alexander, I don't know how much you watch of this channel. I do videos, even specific ones for Canada. I did the Tether Canada video not too long ago. I did a whole bunch of stories regarding UK and inflation reports. I do a whole bunch of stories. Oh, exchanges. I cover a whole bunch of Singaporean and Pacific Rim exchanges. So no, I do not. Yes, Jimbo, I'm manipulating the market. I'm going to manipulate it to 60 cents so I can get your back. So no, Alexander, I do not ignore the topic about crypto in Russia and other countries. It is definitely not about the USA and my world. Those of you that watch my channel consistently know that my viewer base is about half based in the United States, half based elsewhere around the world. Outside of the United States, my biggest viewerships come from the UK. They come from Canada. All right. And then it's kind of like a mix in between. So no, I cover crypto news from everywhere. Now, I don't cover rumors as much because I don't like doing that. I cover the news. Todd, the Onsler says, your insights are awesome. See you on the first. Todd, I will see you then, kind sir. Jimbo Tango, all right, I got to thank you for that. Jimbo Tango says, hi, Klaus, are you still manipulating the market? Remember I was called out and was like, you know what, I'm a market manipulator. Guys, I report the news, man. If I was a market manipulator, trust me, I would be wanting better things to be happening with the prices of our favorite cryptos. We're going to go on here just a little bit longer. You know what? We're going to end the stream at 9:25 so I can get on with my day. I'm probably going to do a video about this action right here. What we got to look forward to, all right? What we got to look forward to is what Jerome Powell and the Fed are going to say, and we have other big dates in crypto. Now, if you want to know what those big dates in crypto are, there is a video I did called January 2023 Crypto Big Dates, all right? Twitch Radio chimes in, says, I've also noticed a lot of people are liking the idea of changing from V6 because of the i4. Yeah, because it saves gas. Yeah, actually, for Jimbo Tango knows this, and Jimbo Tango is part of the big segment of people outside the United States that watch. And thank you, Jimbo, for being a crazy supporter of the channel. I really appreciate it. Europe for a long time, okay? If you were to look at like a similar model car in the United States and a similar model car in Europe, you're going to see the United States models are going to have your big V8s, you know, your higher displacement V6s, stuff like that. The European counterpart of the same models are going to have turbo 4 cylinders, small inline 5s, stuff like that. So Europe, because of like the higher gas prices that Europe has been dealing with for a lot longer time than the United States, their car manufacturing has actually been more into that whole kind of smaller displacement engine, turbocharged models. In fact, I got one for you, Twitch Radio. Here we go. Did you guys know Cadillac, I'm a big car guy too. Cadillac makes something called their V series, all right? They make a V line of cars. CTS-V, DTS-V, they make a whole bunch of V series. V series, just think of Vet, okay? Vet. Back in the day when the CTS-V came out, okay? The CTS-V was actually the CTS Cadillac with the Corvette powertrain in it, all right? The new V line from Cadillac is not the Corvette powertrain anymore. It's their own proprietary one that's done through like twin turbo mechanisms, single turbo mechanisms. So even Cadillac now is going more with the European model of where their performance-based vehicles are now smaller displacement, bi-turbo, twin turbo, whatever you want to call it. And bi and twin are different, so don't mix those two up. But bi-turbo, twin turbo, that's what you're seeing now even on U.S. manufacturing. So the U.S. manufacturers out here are starting to take cues from Europe, getting rid of the lower displacement engine stuff, or getting rid of the higher displacement engine stuff and going to lower displacement engine stuff. Digital Orgy says, I love my RX 350. Yeah, RX 350s are good. I like those too. But yeah, so it's very interesting to see. In fact, did you guys know, I'm a huge Dodge fan as well, just to throw it out there. Did you know that 2023 is now going to be the last year of Dodge's big engines? That this is the year to celebrate big displacement, you know, your big 6.2 liters and all that kind of going forth. Pretty neat, isn't it? Pretty neat. Hey, Just Saying says, what did I miss? What you missed is the CPI data came in at 6.5. Let me clear this up for you. CPI data came in at 6.5. Now, I'm going to be honest with everyone here, okay? And we're going to end the stream at 9:25 just so I can rest my voice, do another video here. The thing that concerns me about CPI data, all right, and this is what you're going to see. You're going to start seeing people dig into the data, is food. Food at home is still not going down. Yes, used car bubble popped, all right? But look at food at home. Food at home is still up 11.8% year over year. Yeah, and heavy bodies too, Digital Orgy. Dodge has way too many heavy bodies. But check this out. This is the data that just came out. Cereal up 16%. Dairy 15%. Non-alcoholic, your sodas and all that, 12.6. 13.9 for other food at home. So food, the thing that really hits hard on people like food, because think about it, right? Our grocery bills are still way too high. So yes, inflation as a whole came down, but the problem is this. Things that are tied to people, right? Cereal and dairy is still way too high. Way too high. Food itself is just way too high. Because look, food is still the big thing, and that's the big one affecting people. Energy services, that's the other thing, right? For my European fans out there, Jimbo Tango et al. Natural gas, look, natural gas is still up 19.3%. Defender P90 is on my wish list. Ooh, Nico, you got a hell of a wish list, man. Jesus. Electricity is still up 14.3. So think about that. Things that are hitting us now as people, like consumer-based items, those are still really hitting hard, guys. Energy services are still there. Energy commodities, you could see that oil, right, up 41.5%. Be very careful, everyone. Pay attention to oil. As China's market opens up, demand for oil is going to increase. Be very careful about this summer being another rough gas price one. Be very, very careful about that. Twitch says, anyways, I'm out. Take care, everyone. Thank you so much. Rusty Shackelford says, I'm late to the show. What was CPI? CPI came in at 6.5. Good, sir. 6.5. Something I want to show you, okay, is shelter. I'm sorry. Something I want to show you is when you look at services, look, shelter is still high. Transportation services are still high. Let me see here. Commodities. We already went over used trucks, apparel. Nothing else really too much in the action here. I mean, it's nothing too much. Kind of crazy. But what I want to focus on, give me 1 second. I'm trying to find something here. Energy. Hold on 1 second here. Is the natural gas and electricity still being up? It's still going up. You know, that's the hard part. Things that are affecting people are still going up price-wise. And like I said, if you have any questions, comments, right now is the time to get them in because I'm going to be ending the stream here in the next couple minutes. So if you have questions, hit me up in the chat. I'm going to have a quick drink of liquids here. Give me a second. All right, there we go. Wet my whistle a little bit here. And you can see now we're starting to fight back. We're starting to get in that resistance point. Starting to see it with XLM too. XLM needs to stay above 8 cents. We need to see that happen. That has to happen. Bitcoin, same thing. We need Bitcoin to stay above 18,000. That's extremely important as well. But CPI data, remember the next one comes out February 14th, 8:30 a.m. It's noon somewhere. Yes, it is, Digital Orgy. It is noon somewhere. Wes says, thanks for all your hard work. Look for me in the big red crane on I-26 when you come by this way. Yeah, I'm seriously, I'm thinking of heading out that way just to do some off-grid hiking and camping with my dog. So if I see a big red crane on I-26 on the parkway, yep, the Blue Ridge Parkway, I will definitely give you a nod, sir. So anyone else, if you got any questions, now's the time to fire them up because we're going to be ending the stream here quite soon. Again, things hitting people are still high. Still high. Scott Day says, quick synopsis of what this means this morning and what it's going to be. I think the thing is this. CPI data came in good. And I know I'm putting 6.5 in is good. The problem is the things that are affecting people are still too high. It's still too high. Natural gas is still high. Electricity is still high. It's rough. It's really rough. Services, less energy. Transportation is up there. Medical services are up there. I mean, that's the problem. Things that are hitting people is still high. Now, for those of you out there that are listening, the reason gas is starting to go up, right? Price per barrel is starting to go up. Has to do with China opening up their economy. That means the demand on fuel is going to be there. Consumer-based, manufacturing-based, as well as travel-based fuel is going to start going up. Centra Sylvia says, take care and be well, Klaus. Appreciate you, bub. Don't let your meat loaf. No, I'll be good, man. I will be good. Justin Sands says, hey, Klaus, where can we get a cool cap like yours? I got mine from Meridian 2021. So I'm sure Stellar has them. I'm sure Stellar has them. Chris Roberts says, so should we have more of this bearish market off these predictions? The thing is this, we're worried about China. We are worried about China coming in. We're worried about that what happens is when the Chinese economy remember they opened, but remember there's always a lag time. What we're worried about is this, that you're going to see another dip for maybe like a month or two, and that China's demand might kind of bring inflation back up. If China's inflation brings it back up, which some of us are worried about, we're going to have to really, really be cautious, because that would put more pressure on Jerome Powell and the Fed to jack up rates. Jason says, someone mentioned VeChain earlier. What's your take on it? I don't have any professional take on it, as if I don't have enough information. I just don't follow them closely enough to give my opinion. And for those of you out there that watch, I do not give my opinion on something unless I really, really follow it closely. There's no sense in me trying to act cool like I know everything, because I don't know everything. So VeChain, I don't follow them close enough to say anything on it, but thank you though for asking. I'm thinking this. If you guys want my prediction, all right, for what's going to happen, my prediction is that CPI data is going to look like this. You're going to see it come down. My fear is that it's going to come down and that China might be kind of doing this. China might bring it back up. That's what is bothering me. Hey, Just Saying says, do you think the world is ready for crypto? I think once we get more of the bad players out, I think once we get rid of your Justin Suns and your CZs out there, I think the world will be ready. I think, too, the world will be ready once we see more use case. Lowe's did a thing where they're using Web3 to stop theft, like an anti-theft program. That's really important. You need to see more use cases with crypto. End the show with Ginger or Mary Ann. You got to love me some Ginger, man. Got to love me some Ginger. Oh, love me some Ginger. But anyways, thank you very much, everyone, for watching. What I am going to do, I'm going to play a little bit of music in backgrounds for y'all to say your thank yous. Make sure everyone out there says goodbye to each other, you guys. This is all a very, very big community that we've got going. Give me a second here. I'm going to put this on. Hold on. Here we go. I'm going to put some music on up here so you guys can say bye. Like I said, make sure you say goodbye to each other as too. It means a lot for me if y'all could do that. So what I'm going to do is I am going to put my mic on mute. I'm going to leave the heat map up for y'all to chill out just a little bit. I'm going to hit up the keyboard. You all have a great rest of your day.